Hello again, everyone. Welcome back. In this technical analysis of the stock market video, we're going to take a look at the Russell 2000 ETF IWM today, but we're also going to do a quick comparison of the SPY, the Qs, IWM to what's happened in the last 4 months in here. And I'll use the SPY as kind of a benchmark on that. It's interesting, the title of the video today, Round Trip to Nowhere. I'm going to steal that from Carter Worth, who happened to say that yesterday when he was on Fast Money, and he was talking about what the S&P 500 has done since the end of July, basically, or the high in July, and his comment was it was basically a round trip to nowhere. And I thought, well, that pretty well describes it. So we're going to take a look at that. And then we're going to drill into IWM, take a look at what's happening with that and the Elliott Wave picture on it, look at a couple of our key indicators, and then check in on the Magnificent Seven. All right, so here's what happened with the Dow, the S&P 500, and the NASDAQ 100. The Dow was up 855 points this last week. So the huge move continues to thrust to the upside. In here, you can see the number right there. I had to try to get the screen sized equally. 5 weeks in a row, straight up like a rocket. So consuming a lot of fuel, and just like in a rocket, if it runs out of fuel, it falls back under its own weight. We'll see what happens. All right, so the numbers up here where you see in bold the percentage gain, that's off of the October 22 low, okay, intra-week low. So up 26.5%. And the S&P 500 up 31.9%. That high is still holding the week of July 23rd high, intra-week high. We were up 35 points this last week, and also, the 5th week in a row. Now, when you look at the NASDAQ 100, not so much. I mean, it kind of a little bit of a pause type day. It's almost like it is running out of steam a little bit. You can see the size of the bodies in here getting smaller and smaller. And the tiniest one was this last week, and it was only up 15.57 points. So that's the picture. We definitely have divergence on 2 out of these 3, not so much on the industrials, but on the S&P and the NASDAQ 100, we definitely do. Let's take a look. Let me pull up the SPY on a weekly basis. So here's what we're talking about with this round trip to nowhere. So, the close right here, the week of July 23rd, which I can't remember the exact Friday that, it might have been like the 28th or 29th or something like that, but it was definitely the last full week of July. Since that time, to the close this last week on Friday, up 2.18, 0.5%. 2.18, up 0.5% over the last 4 months. Now, the only reason that's happened is because of what's happened in the last 5 weeks. Now, a little stronger, let's take a look at the Qs. Up 6.46, up 1.7%. in the last 4 months, okay? And then when we take a look at IWM, a little bit different story. Down 11.52, down 5.9% from close of the week of July 23rd to the close of this last week, which is the week of November 26th, closing on December 1st. So interesting picture. Let's drill in and take a look at IWM. Okay, so on Friday, it was up $5.25. Pretty nice little move, big explosion to the upside. For the week, up $5.58, and the vast majority of that occurred on Friday. Okay, so the Elliott Wave count I've got in here is this, that we are working intermediate wave 2. Let me just pull this back. I've got this as an A, B, C zigzag underway. Now, this could turn into being 1, 2, and then 3, for like a bigger impulse type wave. But right now, I'm going to, it really doesn't matter because the C wave or a third wave are both going to act the same. Where you're going to be able to know the difference is if the C wave turns into an ending diagonal of some kind, then you know it's a C wave, because a third wave can never be an ending diagonal. It's always got to be an impulse pattern. But for right now, this is the pattern we've got, that we're working 1, 2, and trying to get a finish off of the second intermediate wave of the C wave. But it's unclear as to whether we're there or not yet. And the reason why is we've definitely gone deep enough. We're definitely in that what I call a reversal zone in terms of retracement of 2 versus 1, 50 to 61.8%. We closed slightly above that. But here's what I was looking at during the week with my members, and I commented to them. Let me just scroll this back a little bit. Now take a look at what's happening here. I think it was right about here on Tuesday. I said the thing that's jumping out at me is, look at this, the way this looks. 1, sharp 2 back, pull back 2, strong move straight up 3, sideways 4. It looks like a classic development of an impulse wave. 1, 2, 3, 4. I said there's a decent chance that this could then pop to the upside to get that fifth wave in here. And that's exactly what happened over the next several days. We exploded to the upside. So there's a very real possibility that this could be wave A. And I've got it labeled down here as an alternate count versus what I've got on the screen. And the reason I'm going with this as a combined zigzag WXY is because of how deep we've already gone with this move, okay? And I'm leaning, so if, for example, this is wave A, then what I think is going to be going on is that we're going to get a B and then another C. And the question is, how is that going to play out? What's it going to look like? You just don't know for sure, okay? If that were to play out like this. Now, the reason why I'm looking at this and saying if this is an impulse wave A and that it's not the start of a new bull move, is because I believe we had a solid 5 waves right here. And a solid 5 waves like that is telling you the direction of the primary move, which is down. So therefore, 5, 3, and then the next 5 wave down. So what we're trying to do is finish off the 3. Okay, so do we have it now? Or is it still to be decided? Is it going to play out like here? So that's where we sit with the Russell 2000. We've definitely gone deep enough on a retracement. The real question is it going to morph into something else? Well, right now we've got the price action hasn't rolled over, number one. So this is where we sit with the Russell 2000. Interesting picture. Let's take a look at a couple of indicators. Okay, so last week I talked about the percent of stocks above their 50-day moving average in the S&P 500. Well, this indicator shows you the percent of stocks above the 50-day moving average on the New York Stock Exchange. Well, we're getting similar type numbers and we're pushing up in here, but you can see we are getting into some rarefied air. On Friday, closed at 80.3% of the stocks on the New York Stock Exchange are above their 50-day moving average. Well, you get up into that area, you don't stay there very long, okay? So you look at what happened in July, you look back what happened in January into February, and remember we had that peak on Groundhog Day, February 2nd. Had a little blip up above for, basically 1 to 2 days in here in December of 22. It just doesn't stay up there very long. And of course, once we get chopping around up there, I'll be watching the moving averages for a rollover and a flip to the downside. But I think we're getting into that stage where I don't think we have too many more days up in this overbought territory. Let's take a look at the high-low on the New York. Since we're talking about the New York, let me pull that up right here. On Friday, we had 167 more stocks hitting 52-week highs than lows. So It's taken a while to get back up there, but we were chopping around a little bit down here. I wasn't sure if it was really going to pop, and then all of a sudden on Friday we got this kind of a pop. But you can see we're getting up into that territory where we were February 2nd, back in July. So again, getting close. So a couple of other indicators, and we just continue to watch these every day to see, when, confirmation with price action, when is this thing rolling over? Okay, let's take a look at a couple of the Magnificent Seven. Okay, first off is Tesla. On the Magnificent Seven, there were 3 up this week and 4 negative. Tesla was the biggest mover percentage-wise. It was up 1.4%, up $3.38 on the week. Now you can see we just got done talking about comparing where we sit now versus July, towards the end of July. Well, here's the same kind of picture, and you can see how much further below that level Tesla is in terms of having sold off. It's down $27.61 from that point, the week of July 23rd, the week ending July 23rd, the week of July 23rd. And then the other one I wanted to point out was Alphabet. Okay, so Tesla is the biggest mover to the upside. Alphabet Class A, what I continue to call Google, was the biggest loser. It was down $4.83, 3.5%. And again, here's the comparison to that week of July 23rd. Okay, and it is up a whopping 72 cents since that period. If I got that math right, the picture doesn't look right. Let me double check that. That's right. I think, they're saying the close in here was 131.86, and I'm not sure the bar is not quite showing that. Yeah, it says 131.86, and this high right over here, the close on this bar, 132.58. So yeah, down 70, not up, down 72 cents. That's right. I was going to say, the picture's not lying, and it just had the math reversed for whatever reason, down 72 cents over the last 4 months. For all intents and purposes, it went nowhere. Okay, so that's the picture we've got on Google, and that's it for this week. If you felt like this video was helpful, give it a thumbs up. If you're not a subscriber to this channel, hit that little subscriber button. And if you'd like more of this information on a regular basis, head on over to joehenches.net. Check out the website and the membership. Everyone have a great week. We'll talk to you on the next video.